everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Galvin. Jumping into the charts on this November 2nd, what a wild day it is. Obviously the long-awaited FOMC meeting has occurred. The press conference is finished by Powell. All the questions are completed. And the big takeaways, there's one big takeaway that I have in mind that I want to communicate to all of you and my members. And we have been preaching this in our videos. We actually touched base on it yesterday in yesterday's daily analysis video. But the fact that, and I'm going to quote Powell's words, basically the one standout comment that Powell made today that is really crucial to wrap your mind around is the fact that he said it is easier for us to go back to QE than it is for us to under tighten. So it's basically they are going to keep tightening until something breaks because it is easier for them to start QE and lower interest rates and be more accommodative than it is for them to miss the inflation boat and under tighten. So that just shows you that they're going to break something and they're not going to stop raising rates and quantitative tightening until something breaks or until they hit their lower inflationary targets. Now, I don't think they're going to get to their inflationary targets of 2%, but I do think, around 3 or 4 is probably going to be the new norm that they do stop. But the crazy thing about the FOMC meeting, and this is why it's so important to understand price action technicals and not get sucked in by the first move. This was when the Fed minutes came out. You saw pretty much a potential breakout that was taking you to a level that basically you can say it's a retrace back to this breakdown zone where you had your gap down, and then your gap up, reversal, sell act, retrace over here, and then you retrace back to the breakdown zone, a clear technical retrace. And this was the big level to confirm above if you were bullish, and we failed to confirm above that level. So therefore, the bears took control and brought the price action back down, and it just so happened to coincide with Jerome Powell being extra hawkish today. The Fed minutes were a little bit more dovish, but his tone was extra hawkish. And the big takeaways, they're sticking to Fed balance sheet roll-off, and they're also sticking to tightening no matter what the cause. And the only thing that is essentially going to get them to pivot is the fact that they will have to see something break in the financial system. And that's something I think we will eventually see. But up until we see that, these markets are likely going to start their next trending downtrend. So if we flip to the intraday, you can see the big fake out FOMC pop. Often the first move is the wrong move in these FOMCs. It sucks in all the bunch of new longs. It makes all the shorts cover their position right before they slam it back lower. Now on the daily chart, you can see the S&P is under immense pressure, 2.12%. Once you get a retrace back to this downsloping trend line, there is a likely chance that you get a potential bounce, but I don't think it's going to be a long-lived bounce. I think it's going to be very short-lived. As you can see, the S&P is still currently bleeding lower. Keep in mind, we have always said that as long as you're trading inside of this yellow line here, this head and shoulders target, all of this is known as bearish consolidation, even despite we've had a pretty strong rally up to this 390 level. Now, the intriguing thing is that we still have this technical daily gap fill down on the chart around 357.37. I've mentioned it in countless videos that we're going to need to fill that gap, in my opinion, before the markets have a chance of heading higher. And it looks like we're going to see that. And keep in mind, this tail here is a fake print. If we flip to the daily chart, you can see it is a massive technical gap on the chart, and I do think we're going to fill that sooner rather than later. Potentially, if the markets really get ugly out here, we could see it sometime next week we fill this gap. But overall, the S&P is under immense pressure today, which is extremely healthy for our portfolio. We are positioned on the short side, and that is something beautiful to see. If we touch base on oil was looking very bullish. It was trying to break out. If you flip to the 8-hour chart, you're potentially getting an intraday topping tail, but it's too early to tell. But oil is going to see that demand destruction now that the Fed is remaining extra hawkish. I do think you're going to see a lot of people take into account demand destruction since now there's no Fed pivot on the table. A lot of people were hoping that the Fed pivot was going to coincide with the midterm elections due to political pressure. But again, that's what the narrative, what the news was pumping, and that's why we were taking the opposite stance. And you can clearly see our stance in the previous video analysis. Natural gas is strong today. It is up 5.78%, so it is still holding this bullish consolidation for it to potentially move up. I still think natural gas has to hit this 670 level, but there's no trade here for me. I still have to just wait on the sidelines. Another chart I want to show you is XOM. XOM was basically, it fell today and then it reversed higher, and now it's fallen down 2%, and we have been primed and ready for Exxon and energy to fall. We've been touching base on energy for the last week. The beautiful thing about Exxon, and there's still 2 days left, is if we get this reversal signal, this weekly topping tail, it is at the high of the chart. It is at a parallel channel of resistance. You're at a long-term retrace of a breakdown zone. I have a trend line going all the way back to 1975 pivot. Basically, you kissed it here in 78, a 1982 pivot, and then this was your major breakdown zone that occurred in basically 2018 before oil made its eventual dump in 2019 and 2020. And you can see that that trend line intersects right at that wick high today. So that is a thing of beauty. That's why technicals are so strong. I think energy is going to get decimated in the near term just due to the fact that demand destruction should take hold as these markets trend much lower. Okay, so let me just catch my breath, but let's take a look at the DXY. And the DXY is so crucial. We've been telling you that we had this inverse head and shoulders, which broke out, confirmed on multiple short time frames, which pointed to the probability of an upside move in the dollar. Again, we prepped all of you members for this, and this is why we've been accumulating shorts on this market, because we saw dollar strength and accumulation occurring and bullish pattern formations occurring. So you have two inverse head and shoulders. You first have your little one here, which has triggered and confirmed. The upside target takes you to 112.56. And then you have a larger head and shoulders, which you have a big left shoulder here, your head, and your right shoulder, which takes you to about this triple top here, this 114 level and change. So clearly, if the dollar fulfills those upside moves, that's going to put a tremendous amount of pressure on the overall equity markets, and that's something we prepped everybody for, so this should not be a surprise. Now, the inevitable dump out, why did we dump out on the dollar? Well, one could say it was the fake out, shake out, but I like to trust the technicals. You can see we had a daily gap fill or an intraday gap fill down here around 110.66, which we overshot for a little bit, but you did not confirm below. You recaptured the bigger inverse head and shoulders neckline, and now look at the rip-roaring rally in the dollar. This is truly incredible to witness and watch. Witnessing history unfold is truly impeccable. Now, the dollar likely heads back up to the upside of this range here, but you can just clearly see I'm getting a lot of signals here as the markets fall sharply, but the dollar is likely to head all the way back up to this 114 to fulfill both of its inverse head and shoulders patterns. So again, this should not be a surprise. We prepped everybody based off of the bullish signals we were getting, and you can also see the inverse head and shoulders on the 2-year yield, which triggered. And the beautiful thing about the 2 years is you've now filled this daily intraday gap to the downside and had a mega reversal, and it looks like you're recapturing an important trend line, which was a breakdown trend line which sent you to your lower range. But yields are now on pace to basically hit the double top here at the very minimum, which you tagged today, but I think you head all the way back up to potentially 4.75% on the 2-year yield, which will be an impeccable move, so to speak. But just take a look at the powerful sheer surge in yields. You can see you had this first bullish engulfing candle, which was your signal that yields potentially had much more upside. And after that engulfing candle, look what you've had. 1, 2, 3 mega days of upside in yields. We talked about a divergence between the bond market and the stock market. It happened 4 times in this year where stocks trended higher as bonds headed lower. And what happened? Stocks played catch up to the downside. Well, this is now the 5th time where bonds were getting crushed and the stocks were rallying, but now stocks are starting to get crushed. Look at this sell-off in the SPY. It is just relentless selling. Sell-side action is occurring, and I don't think this is going to stop, at least until the end of the week, where we could see some sort of a technical bounce off of a mini minor support level. Let's take a look at gold, because things are so exciting. Gold was looking uber bullish, and this is a nasty reversal signal on gold. The fact that gold was trading all the way at the highs here, 1670, and now it's all the way at the lows. it leads to my conclusion based off of the dollar strength, my dollar targets, my yield targets. Gold is probably going to break these lows at 16.15s. Now, should I sell everything and get out of our gold position? No, I'm not going to do that because I have no problem accumulating more of a gold position, a long gold position. But it's very likely that gold now heads back down to this 15.58 level, or even around this 15.50 level, or a level that will coincide with this downsloping parallel channel. Let's take a look at silver. Silver's obviously under immense pressure as well. Silver is having a big time reversal as well. You don't want to see a bearish engulfing candle. If silver at the end of the day, which is in 6 minutes, takes out this low, or sorry, in 2 hours for silver, if silver takes out this low, that's a super bearish sign, and it likely means silver's probably going to break this downsloping channel and probably head back down to the 1740 level, which is a major support level that I have in mind. So massive action in the markets. Let's take a look at the Qs. QQQ is also under a substantial amount of pressure. Look at the relative weakness in the Qs. The Qs is now testing this downsloping trend line as opposed to the SPY, so that hasn't hit that. So I think the SPY will see a tremendous amount of downside pressure, but Qs will be a good kind of sentiment indicator to see whether or not this level gives us a bounce. If it doesn't give us a bounce off this level, then it's likely that the S&P 500 also fails to give us a bounce. Let's take a look at Bitcoin, BTC, USD. So Bitcoin, again, is holding up relatively well in comparison to the markets. Considering the S&P is down more than Bitcoin is very surprising. But now Bitcoin is at a crucial stage here that if the dollar continues flexing its muscles, it's likely going to break down. But Bitcoin is still impressively holding this inside bar bullish consolidation. As long as you don't take out this low and close below it, this is still bullish consolidation in Bitcoin, and it does favor a move up. So it'll be interesting to see if we have a little bit of a divergence between crypto and the overall stock market. It's certainly looking like that, which is just fascinating to me. Let me see if I can touch base on anything else here. Let's take a look at the US 10-year yield, the longer term yield. So the US 10-year yield is not as powerful as the 2-year yield, but certainly it is having an up day, which is putting pressure on the markets as well. So the 10-year yield, I think the 10-year yield is probably going to have a little bit more of a struggle to basically get to double top. I have it priced in that we get to about 420, maybe a little bit higher, give or take, but there's going to be lots of resistance up ahead at that level. Let me just see if I can touch base on anything else. We were looking at the XLE as a sector. The XLE has had a beautiful reversal, double top, retrace back to the breakdown zone trend line, and look at that thing of beauty. We almost have a weekly reversal signal at the highs of the chart, and that will just be very intriguing if we get that reversal because we are short energy in a tremendous way. So let's continue to monitor these charts, but once again, the technicals are prevailing, and it is truly amazing to be on the right side of this market when most people are getting decimated. We are holding a major short on Gilead. Let me just pull up that chart, GILD. This was a day trade short, so it's a very big position, and this thing just would not let up. But after today's price action, you can see that the reversal, the strength in Gilead, it was just luring people in, making this bullish consolidation. And now look at this beautiful reversal signal, beautiful daily topping tail. If it holds in 2 minutes, we will have a nasty reversal signal. Let me just check the volume. It's not on a substantial amount of volume, but it is a beautiful reversal signal that should take you back down to this major support zone in and around this $71 to $70 range. Couple key technical gaps. So I'm going to hold this day trade short for a little bit until I think the potential downside move. So our average right now is sitting around, let me just pull up my phone and check. I know we shorted at these levels 77, 78, and 79. So my average is sitting at 78.54. So we are in the money on that day trade, and it is a massive position in our portfolio. So it'll be super healthy if we can see Gilead fall all the way down to this technical gap fill. That would be a lovely 10% on a day trade, which is certainly possible in a short period of time, just due to how fast this rally occurred, and now that earnings is out of the way and that the markets should price in a more hawkish Fed. Let's take a look at AMD because they did report earnings. AMD was super strong at the end of at the beginning of the day, and yesterday after earnings, they did have a good earnings report. You can see they touched a high here of 64, and now they've reversed and pretty much almost engulfed the last 1, 2, 3, 4, 5, 6, 7 days of price action. So AMD is certainly under an immense amount of pressure. Obviously, this pattern is bearish. So if we break down past this trend line and confirm below, I have it priced in that AMD is likely coming back down to this $50 area. That will be a beautiful psychological number, and we will be buyers of AMD at that level if it does get to that level. So all in all, the Fed summary, basically Powell's going to break something. He's not going to stop. The Fed pivot once again has been snuffed out. Their main focus is bringing inflation down. They do not want to see these markets rally because that only contributes to more wealth creation and inflation. So they're going to definitely break something. And look at this sell on the SPY. And the beautiful thing, it is happening on volume. We're currently trading over 100 million, 105 million. So that is an exceptional amount of heavy sell side volume. This downtrend is likely starting its next leg lower. And I have it still priced that we have to fulfill this downside move at 356 in order for the head and shoulders to complete. But by the end of the year, we've been saying it's likely we see a 325.10 level, a retrace back to the pre-COVID high. So that's kind of what my expectations are heading into the remainder of the year, but it's not looking bullish at all for stocks. And I am certainly okay with that. All in all, amazing trading. You can hear it in my voice how excited I am because we are on the short side of this market, and the fact that now with the extreme hawkishness of the Fed, let's not get in the way of this market until the technical setup is just absolutely sublime. Please give this video a like down below and stay tuned for more price action.